We continue to follow breaking news on a major trade deal secured with the European Union. Just a short time ago, the president emerged from a high-stake trade meeting with EU leaders and announced that the two sides have reached the framework for a landmark deal. It comes just days before Trump's massive 30% tariffs were set to kick into place for European imports if a deal wasn't reached. Now Trump says those countries will pay a 15% tariff and have vowed to purchase hundreds of billions of dollars in U.S. products and investments. CNN's Jeff Zeleny joins us now live from Scotland. And Jeff, the president said that the deal with the European Union is, quote, the biggest deal ever made. And that deal apparently solidified in a one-hour meeting. Tell us more.
Isabel, certainly finalized in a one-hour meeting, but this has been something, the negotiations, we are told, have been really underway for months, ever since the president in May threatened a 50% tariff rate, then dialed it back to 30%. Now this puts it back to 15%, so much higher than European Union nations would have originally liked, but of course not as high as was threatened by the United States. But this does avoid a transatlantic trade war, and European Union member countries were threatening to retaliate against the United States as well. So that is not going to happen now. But the announcement came at the Trump Turnberry Golf Resort just a short time ago. Let's listen.
I think we both wanted to make a deal. You said something that is very important. It's going to bring us closer together. I think this deal will bring us very close together, actually. Sort of, it's a partnership in a sense, but it's a very good point, and it's something that's very important.
And the president of the European Commission, Ursula von der Leyen, was sitting there next to President Trump. She said that this will bring stability and certainty to European nations. Of course, the EU is an organization that represents some 27 member nations. Now, each of them will be dissecting this and getting details. Details are very scant in this, so that is something we will be learning in the hours and days to come. But the EU member countries have agreed to purchase U.S. military equipment and energy as well, adding to the bottom line of this deal. But look, the bottom line of this is a major deal. There's no doubt, because the EU is America's largest trading partner. Some $1.7 trillion of commerce was at stake here. So it's a superlative, but it's an accurate one, the largest deal reached yet. And it follows in line of other deals the government has reached with Japan and the UK as well.
Jeff Zeleny, thank you. Let's bring in Diane Swong. She's the chief economist for KPMG. Diane, really appreciate your time. Let me start by getting your reaction to this framework trade deal with the EU and locking in that 15% tariff on European imports, including cars, that Trump called the biggest deal ever made. What do you think?
Well, I think what's important is we're starting to finally get some certainty about what the end game on tariffs will be. That's very important. There still is some sector tariffs out there that are in the pipeline. Everything from semiconductors to copper and lumber are still getting ready to be launched as well. But this is very important to start getting a sense of where companies can reshuffle their supply chains, how they can deal with the tariffs, and how much will have to be ultimately absorbed. That aspect of uncertainty to some level of certainty is one of the reasons why we've seen financial markets, whenever these deals, even though they're not yet signed and they're not ironclad, relief rally come out in financial markets, because there's just this sense of it's a moving target. So to have a target and to know what the actual tariffs are is very important.
So you think the markets will be in the green due to the stability and the sigh of relief?
We could see a relief rally. What I worry about is that financial markets are not pricing in the actual cost of these tariffs to the bottom line and to consumers. It takes about 6 to 18 months for the full effects of tariffs to kick in. So we're only at the beginning edge of these tariffs kicking in. And we're talking about moving tariffs from an effective rate of below 3% to still, with this deal that we've heard today, above or close to 20%. That is a stunning increase in tariffs by year end. We've mitigated them a bit with stockpiling, and many of the things on store shelves have yet to reflect tariff prices because they were stockpiled and bought ahead of tariffs. Those are still in the pipeline. So I worry that the financial markets have been a little bit complacent in terms of what this actually means for the overall economy, everything from employment to prices to the costs of doing business.
Yeah, let's dig in on that impact a little bit more, what that would look like for the average American here, even if it takes months to see this realized out. What would that look like to see the sudden jump in European products? Because a reminder, it's the importer that pays for these tariffs. What would that look like for the average American?
Well, there's a lot of uncertainty about that, which is why the Federal Reserve is going to be so divided. We do expect to see a bump of at least a percentage point in the CPI and in the overall inflation measures before this is all over, maybe even a little bit more than that. And that is unwelcome news to price levels that are still high and consumers that are still feeling the sting of the burn of the earlier pandemic-induced inflation. Another key issue is whether or not the administration decides to move forward with ideas it's floated of giving rebates on checks of the tariff revenues that they're collecting. That sort of recycling of funds would only amplify the inflationary effects of these as well. So it still has a stagflationary nature to it because it squeezes profit margins and boosts prices. It just takes time for all those effects to show up. And the uncertainty on that time frame is one of the reasons why you're likely to see a dissent at the Federal Reserve, at least one, if not two, dissents among the Board of Governors who would like to cut in July. Not because the economy is so strong. What they're arguing, what Governor Waller has argued, is that he worries that the damage to demand and the labor market is too great to risk, and that he thinks the bump in tariffs will be temporary. They don't know for sure. That's why you're seeing this dissonance come out in policymakers talking about the next interest rate move as well.
Diane Swonk, the economy is certainly not the easiest of topics to talk about, but it certainly impacts us all. Thank you for your time.